live. It's Edge Radio Australia. We're here for the greater wealth, and the man sitting beside me, ready with all the information. You are. Look, you've got a piece of paper. Look how organised you are.
Mate, I've got my cheat sheet
Oh,
here
cheat
today.
sheet, away we go. Jeff Bowman, of course, Wealth by Design, mate. Great to see you.
Thank you, Aaron. Lovely to be here.
I'm glad to hear it. I look, just off camera, of course, we're patting each other on the back a lot here because we're bringing great guests in every week. And would you like to introduce our
I
guest
certainly
this
may.
week?
Yes, our Wealth by Design guest this week.
Yep.
Is Caillan from Loans Unlimited.
Yeah,
Caillan,
thank you,
welcome.
guys. Thank you to be here.
Yeah.
Pleasure.
It is absolutely a pleasure to have you here. Unlimited. I mean, geez, I might put my hand out right now. Why stop?
Load it up.
Load it up, exactly right. Great name for a business, by the way.
Yeah,
It really is. Yeah.
we actually copied there was a boat dealer of ours that were called Boats Unlimited, and
Right.
we copied theirs, and I had to get the sign off before we did it as well. So, yeah.
I don't know how many boats you're allowed to have. I mean,
unlimited.
Unlimited. Okay, yeah. I'm a car guy, so for me, it'd be cars unlimited. I want as many as I can get. But this is a great thing. It's a business. We all deal with credit every single day, right? Every single day.
Yeah.
And our credit score, it really matters. So, obviously we've got some questions to ask because it's a bit of a, well, to me, okay, it's a black art.
Yeah.
What I used to work for me and keeping my credit score in good nick, and you go through, life changes and, divorces and this and that and all the things that we go through in life.
Yeah.
I'm looking forward to hearing some tips and we'll understand the game better.
I think it's more just that, like we've said before, it's ever changing, and there's so many different scores now that people just aren't aware of. And that's definitely what we'll cover. And I hope some people can learn a few things along the way. So
No, we always learn lots on the couch, don't we?
We do,
Aaron?
mate. We're very comfy. We get away with it.
Comfy couch, lots of learning. Yeah, no. Once again, thanks for coming, Caillan. We've been had a great association with Loans Unlimited now for a while, which has been good. As you know, we spend a lot of time referring our work to various people, and brokers, whether they be insurance brokers or finance brokers, and like in the case of Loans Unlimited, is a bloody good thing because a broker takes the pressure off a lot of our clients when it comes to doing all the hard yards, and after 25 years of referring work to brokers from our financial planning world, they used to take a lot of pressure off us because
I can imagine. I really can.
Although we did a lot of in-house mortgage work ourselves, all our consumer lending and most of our broker mortgage work did go to brokers.
Yeah.
And they and it's a big tick for me for brokers because we had a massive inquiry with the whole financial inquiry that went
it
through
was a
that
biggie.
period.
yeah,
The planners, the brokers, everyone got hammered.
yep,
And I've got to say, it was the finance brokers that were clearly far better organised
Right.
than even the financial advisor groups that were part of my mob.
okay,
Very professional. You sort of defended your turf with respect to justifying commissions, how you earn a living. The brokers came out of it much better than the advisors because
Really?
they were just better organised. Yeah, so a good tip to I tip my lid to your industry.
Well, with my level of being disorganised, this is why I need you guys. You got to find the people who pick up the slack from what you're weak at. Right?
yeah. I guess that's exactly right. We're there to help the people that that are unsure and finding the best deal and making sure that things are happening right. So yeah, that's definitely our space. Yeah.
Yeah, no, it's a credit to you. So on just Aaron sort of touched on the whole credit score thing. Can you take us through that? There's about 3 sort of categories.
So yeah, there's
memory.
Yeah. So obviously we used to deal with the Vita, and that then changed to Equifax. So we're dealing with about 3 different scores pretty much all the time. We've got an Equifax 1.1, which is pretty much what the old Vita score used to be.
Okay.
Mm-hmm.
We've got a comprehensive score, which is a combination of your 1.1, and then that mixes in all of your repayment history information. So all the lenders that are then reporting back regarding your credit card payments, your mortgage payments, your car loan payments, and then providing that information if you're paying it on time, and that sort of stuff. Those 2 scores are then combined to then show what we call a comprehensive report. And then you've got now, which is the new one, which is the sort of most lenders moving towards, which we call a 1 score, which then takes your comprehensive score and mixes, demographic, age, location
Wow.
data.
Okay.
And, you know, uses that information to then provide an accurate score of what's a person living in this area at this age with
Sure.
this comprehensive score. Now that's a new score. So yeah,
Okay.
the three.
Wow.
Yeah,
Okay.
it's
I had
pretty
no
complex.
idea about that
Yeah,
one
yeah,
at
yeah.
all.
Yeah.
Yeah, I can
Yeah.
imagine because I mean I always know the old whatever sub with
The Vita 1.1, which was
Yeah.
the old one. Yeah,
Yeah. Well,
yeah.
I'm a bit out of
Yeah.
out of timing on this kind of thing.
Yeah.
So how long ago did that system sort of slide away?
So the one score has been around for probably about the last 18 months
Oh, okay.
or so.
Okay.
It is new.
Yeah.
Yeah. And that is the score that all the lenders are pushing towards.
Right.
Most of the new sort of, you know, really sort of high-tech lenders in our space are all using that.
Yep.
A lot of the bigger mainstream sort of ones that might, you know, major banks, all those sort of ones, they might be a little bit more behind. But yeah, the one score is definitely the way everyone's going.
Okay.
Yeah.
Okay. Oh, that makes sense.
So in my mind, and it's a very, very limited amount of scope in my mind around this subject, is like a score out of 500 or
Yeah.
something like that, where if you got over 250 or 300, you were sort of in the money, or it was. Is there a guide on that at all?
It's
a rough guide.
Yeah, so it's up to about 1,200. 1,200 is the highest
Is that right?
it can
Okay,
get to.
okay.
Anything over 1,000 is pretty much deemed exceptional.
Okay.
Yes.
Anything over 800 is really where most people want to be.
Yes.
Once you start creeping below 500, that's where we start seeing issues with getting people approved,
Gotcha.
or
Okay.
you know, lenders with you know, not necessarily looking favourable at those sort of people. Yeah.
Okay,
Yeah.
good. Now, I've heard the term low doc loans.
Yep.
Is that something that you guys get involved in or not?
Every day.
Every day?
Right.
Yeah.
Right.
Every
okay.
day.
Quick answer.
So that's where. So you can explain what
Absolutely.
a low doc loan is.
So-
and where does that fit in?
Yeah, so low doc loan is mainly for businesses that are buying assets that are not providing any financial information at all. Like you are
Okay.
not providing financials, not providing, you know, any sort of accountant letters or anything
No
like that.
serviceability.
No, it is
No.
completely low doc. There is, you're signing a piece of paper saying I can afford this. And
That
it's-
exists, does it?
It does, yeah.
Wow.
So for established businesses, normally it's for businesses that are 2 years ABN and they're 2
That
years
makes sense.
GST registered.
Yep.
And it's for stronger customers normally as well. If you've got property in your name, it's a lot easier. But yeah, the stronger you are and the longer you've been trading, the easier that is. Yeah.
Would they take a debenture over your business, for instance? No.
They just take a lien on the asset. Yeah.
Lien
so
on the
yeah.
asset. So you've got to
it's-
have bricks and mortar?
Oh,
If you don't, they normally mitigate that with the deposit. So if
so
you're no house, they'll just say, look, give us a 20% deposit or something like that, and that's what they'll go down.
Okay,
so
cool.
it is secured.
Absolutely,
Yeah.
secured against the car they're buying. Yeah,
Yep, okay.
yeah, or the
Yeah.
machinery or
Yeah.
the equipment or whatever that person's buying. That's
Sure.
the security for the loan. Yeah,
Makes sense.
Yeah, absolutely. Yeah.
So if it's not secured, obviously the rate goes up, and
There's no such. Yeah, it's unsecured business lending. It's very high rate sort of stuff.
Right.
There's some lenders that do it pretty well, but yeah, the rates are pretty astronomical to be fair. But yeah,
okay.
yeah.
we all hear those stories.
Yeah.
Yeah, so it's not bikie money, but it's expensive.
It's expensive, yeah.
Yeah.
You're talking high teens, and it's business cash flow, really.
Yeah.
That's what it's called, yeah.
Yeah, business cash flow.
Yeah.
What sort of rates are they paying roughly?
For business cash flow?
Yeah.
Oh, it's high teens. Yeah, it's like 15, 16,
15,
17
16.
plus. Yeah.
Okay, got
yeah.
it.
That's
Right.
late 80s rates.
Yeah, yeah.
Yeah.
So that's
For those
sort
who
of
can
not
remember.
credit
Yeah.
card money, but it's up there.
It's up there. Yeah. But it's money that they can do anything with, I guess. So that,
Yeah,
off
absolutely.
they go. Most, like I said, but most businesses that we work with that have that sort of facility, it is cash flow, and
Yes.
they might
Yep.
operate a business that they're on 60-day terms or something like that with their
Right.
biggest supplier, and
Sure.
they need to pay their staff for those 60 days, and they use that. to do
Okay,
it.
so you're at the. Okay, this is good. So you're really at the everyday business and personal end of the lending world, where it's all normal.
Yep.
Right.
Yep.
You'll know more than I do, but I remember when the cash converters got going.
Yeah.
Because we're going to the other end of the scale, right?
Yeah,
With
yeah.
this, just bear with me.
No, I think it's just a really good play.
You're talking about payday loans,
Yeah,
essentially.
payday
Yeah.
loans, right? So right to the end,
Yeah.
which is the desperate money.
Yeah.
And I remember being told what the highest interest rate was in Australia, and this bloke said it's 30%, Jeff. And I said, oh, okay, shit, that's getting up there. And then he said per month,
Whoa.
Right.
Yeah.
and I don't know whether it's true or not, but I think it is because this fellow told me very legit. He handed over he was a gambler,
Okay.
and Burswood had got going, the casino had got going, and he handed in his $8,000 Merc as security.
Sure.
to one of the local pawn shops.
Yep.
Which I think was when Cummings and those guys got going with all their
Yeah, when they kind of franchise it.
yeah. And he'd pay 30% a month. He was a gambler, and he often was successful. And he'd go and gamble away, and he'd pay off the say $5,000 against an $8,000 BM, or Merc in this case, roughly. And pay 30% a month each month for 2 or 3 months, and then make enough money, and he'd clear the debt.
Okay.
And get his Merc back. And then things would be going for a while, and then he'd be back with the Merc, right? And he'd get another 3 or 4 grand, hand over the Merc as security, and then pay it off. And anyway, the third time he came back, he never came back to get his Merc.
Okay. And they called the boys. Wow.
He just couldn't make the casino work permanently in his favour.
Well, yeah, I mean,
And
that's
the pawn
high
shop
stakes
got to
stuff.
keep the Merc.
Yeah.
Right,
Yeah.
not bad.
So that's
nice
I guess,
wheels.
yeah. So that's,
Absolutely.
So I guess that's the other extreme end of the lending industry, which
Oh,
sort of
thoroughly
throws it
agree.
into perspective, because you've got the conventional lending guys, like
Yep.
all the banks and the brokers that Caillan's company, and then you've got the extreme end, which is desperate streets.
Of course.
Yeah.
I mean, do you deal with obviously the mainstream things? I wouldn't think for a second you're dealing with that end of town. I would hope not.
No,
yeah.
no, they don't. They
No,
don't.
no. I
The
realise that,
conventional
mate.
brokers, yeah.
Tongue in cheek, very strongly on that one. But from the point of view of okay, you know, these days when it comes to finance, when it comes to credit, a lot of times you've got to be a bit creative, right? And I don't mean dishonest. I mean literally, you know, you've got a new business. It's got, you know, a lot of potential. It might have a cash flow problem. All the kind of thing people are trying to balance. Do you have a lot of different lenders or organisations that you can lean on that might look at more out of the box kind of lending?
Oh, absolutely. I mean, the thing with us is, you know, obviously dealing with 30 odd different lenders, you're trying to make sure you've got something for everyone.
Sure.
Yeah.
And yeah, it's definitely what we would refer to as a subprime lender.
Yep.
So lenders that are going to charge those higher interest rates, because it is out of the box, and
Yes.
it is, you know, they do need to understand, you know, something that a normal bank would never understand. But yeah, there's those lenders available for people all day,
Like
every
private
day.
equity, Caillan?
Yeah, that's most of those companies. They are private equity. Of
course.
Yeah.
Okay.
So yeah, that's definitely that market.
I mean,
So
keeping your credit score, you know, looking shiny and healthy is very, very important. Okay, and I'm wondering about, do you negotiate with? And I've got a sort of a side story to this, but do you negotiate with different firms to come up with better rates for people?
So yeah, definitely it does happen. Most of the lenders that you deal with will have a scope in regards to what they're willing to charge someone.
course,
They'll
of
say,
course.
hey, look, for this customer, we'll charge rates between here and here.
Yep.
To get them to go under that does happen every now and again.
Sure.
But yeah, it definitely can happen. Yeah.
Yep.
Yeah.
Okay. Because, yeah.
Okay. Now, what is the behaviour that can affect your credit score? Like too many applications.
Yeah.
Like you're going.
So
Yeah, like someone tries does it themselves, and they go, boom, 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 and various applications, and
Yeah.
obviously that gets recorded everywhere, and can't be favourable.
No, so the main thing that does, obviously, inquiries is a huge one. Like, you know, and how the algorithm works that calculates the score is it's normally based off the age of your credit file and the number of inquiries you've made. So if you've got somebody, and we see this all the time, people that are just rocking up, you know, we have so many people on visas applying for applications all the
course.
time. They've got really, really short credit files, have only been here for 12 months, but they might have 5 to 10 credit inquiries in that 12-month period. And so their credit score is, you know, in the 300s and the 400s. It's so low because they've made so many inquiries in a short period of time.
Yes.
Someone like, you know, like us, we're established, we've got credit files that are 20, 30 years old, and we might only have 15, 20 inquiries over the lifetime of our credit file. That obviously, you know, it reflects in the score. The score is going to be high because you don't have so many inquiries. Yeah. Yeah.
Okay. Yeah.
So there's no particular. I know it's algorithm based, so you know I'm probably asking a question you probably can't answer. But is there a magic number of applications per 12 months? For
I
I knew, you
there's
know,
not,
I'm putting it
yeah,
out there.
yeah.
Hello.
There's not a magic number,
It's
but
very malleable.
But like for me, I like to say to people, no more than 3 to 4 in a 12-month period. I think if you're making more than 4 every 12 months,
That's a lot, I would think. Jeez.
yeah, it is. Yeah, correct. If you're making more than 4 credit inquiries in 12-month period over and over again, it's not going to be good for you.
Yeah, it's not going to be good. No. Okay.
I
Radio.
just think about that. I would probably make one about every 3 years.
Yeah.
Right?
And that's the thing. You'll find some people they're what we call active credit seekers, right? And so
Right.
they're always actively seeking a credit card, a new car loan. Then they've gone to their personal loan, try to get gone to their banks already, trying to get a personal loan, and they're actively always trying to do something, which then the lenders will go, why does this person always need money?
Sure.
Surely there's issues there. So they start looking at that and digging into that. And, not often they'll be asked for bank statements and they'll have to provide, evidence that they've got cash flow and that sort of stuff. Of
course.
Okay, you mentioned something about bank statements. Is it standard that you would require all your expenditure history on a bank statement where they can see that you've, everything, your cash advances, your Uber, travel, blah, blah, blah. Is that a standard part of an application where you've got to disclose all of that now?
So if you are asked to provide bank statements, most lenders now aren't accepting manual PDFs. Like you can't just download your bank statements and send it through.
Really?
It has to be done through these digital platforms like companies called Caillan and those.
Right.
And they basically will scrape the last 90 days worth of data out of your account and send it through in a report that'll categorize all your spending.
So there can be no fiddling.
No.
There you go.
And because
What's a PDF though? How much fiddling, I suppose?
you can manually edit
Today's
the
software.
PDF.
What am I talking about there?
Yeah.
Hello. Yeah. Okay. Good point. Very good.
Yeah.
You can turn a
very
PDF
easy
into a
to
Word
download
document.
Yes,
Adobe
you can.
PDF editor.
Adobe editor. Aaron.
Look at my naivety. As I'm saying, I think, what are you talking about? It's so true.
Yeah,
People
and
are
that's
pretty
the
creative.
big thing. Like the lenders have really sort of pushed for that not to be a part of our industry anymore because of that.
Okay.
People manually manipulating their PDFs to look better, and that was the reason why these platforms were designed. Yeah.
It's called fraud, though.
Correct.
But technology is advancing so much, isn't it?
Yeah.
Where that now is a standard.
Yeah.
And it cannot be fiddled with. And that's, a bit like why we talk about blockchain from time to
Yeah.
time. Not that I'm going to go on to that now, but, that's so popular and will be very popular because of its security.
Yeah.
You can't go and fiddle it.
I think that's a big thing with the blockchain. We all love that. That's my big attraction to crypto, the fact that people can't fiddle with it.
Yeah.
So I like that. I like the fact that, I don't like... look, I know I don't like too much tech because, quite frankly, I'm not that great at it. But I can see why that reporting system is very, very smart.
Yeah.
Because it keeps the mud out of the water, I guess.
Yeah. And I guess from a lending point of view too, the lenders can make a decision on someone's bank statements in minutes regarding, how many dishonors they've had or where have they spent all their money. They can quickly, analyse that very, very quickly where, back in the day when you got to send through the manual PDFs, you might have an analyst looking through a set of bank statements for 20 minutes to make that decision, So that's why they go down these paths is obviously to minimise the time spent on applications.
Time's money, yeah.
Okay, I've got one for you.
Yeah.
And we touched on, before we came on, we touched on crypto. And what by design, we deal with a lot of accountants because we've got a platform that securely holds their clients' assets, right? Now, here's a question. You're going through the balance sheet and they've got a house, they've got a car, they've got some shares, they've got this much in super, but then they go, and we've got 200,000 in Bitcoin, right? So how do you validate the valuation that they've placed in their disclosure of their Bitcoin assets?
To be fair, most lenders do not ask you to validate an asset and liability statement at all. It's
Wow.
mainly
There you go.
just what you're
So-
putting into the application,
Okay.
There you go. So it's just taken on face value.
And to be fair, it's not something that's heavily biased in making a lender's decision. To be fair, you could put that they own $1 million in crypto. Does that mean they're going to get the loan? No.
No.
Yeah.
No, it's only if they want to take security over.
Yeah, correct. Yeah.
And then they would need to value it.
Yeah,
That
makes
makes
sense.
sense. Yeah. Okay, cool. Very interesting.
Rebuilding your credit score.
Yeah.
Okay, a lot of people have had bad credit in the past, or for that matter, you hear all the stories about someone who had a bad phone bill in the 90s.
Yeah.
Things like that. It sort of chased them for a long, long time.
Yeah.
Relationship breakups, all of those things that get involved in life, right? Is there a way of rebuilding a credit score?
Yeah, for sure. I mean, the main thing is time.
Time,
and eventually things will, time will heal all wounds, right? But there are a lot
they
of,
say.
there are a lot of companies out there at the moment that have services and they're, credit clear wash and those sort of things where they'll actually work with the individuals.
Right.
They'll then advocate on their behalf to speak to the lending institutions or the people that have listed the defaults and those sort of things in getting them removed.
Okay.
So yeah, that's a service that plenty of people use now. We use it all the time to help our clients get defaults and stuff removed off their file in order to then secure better lending facilities for them moving forward. Yeah.
Okay, so could that be where someone was late paying their Telstra bill, or they moved house and they just forgot, they didn't deliberately not pay it, but they just didn't pay it.
Yeah.
And things like that can be argued that they're not dodgy, they're actually legit.
Yeah.
A sort of legitimate mistake, but they're not a bad credit risk. So things like that can be removed off your credit score.
Correct. It's normally if they can come in and show that there was a mitigating circumstance as to why that default happened, essentially, and it will always be around hardship, or it'll always be around something happening in life that came up.
Yep.
And then that they're able to argue that case, and they'll actually remove the default most of the time.
Yeah, it could be a marriage breakup where
Yeah.
an aggrieved partner cranks up the credit card and the other one wears the responsibility because it's in their name, things like that.
All the time.
Yeah, cool. Yeah, all the time.
And that's achieved pretty successfully, obviously.
Yeah. So these companies they'll normally charge a fee for their service to act on your behalf to do that. But yeah, like I said, we deal with a few that we refer most of our business to, and we're dealing with them on a daily basis, to be fair.
Great to hear.
Yeah.
In my experience, I've certainly had experience years ago where you realise how important your credit score is. I was able to negotiate a credit card at a ridiculously low rate compared to what the normal situation was, and it was life changing. I mean, honestly, from a business point of view, like on the Caillan, when interest rates, in that particular case, interest rates were often about 18%. Like the really good ones, if you had a really nice credit rating, was like 10, 12.
Yeah.
And with putting all your eggs in the basket and lining things up and having a really good history. I mean, I was able to get, this is a long time ago, I was able to get it down to 3.99, right? And that revolutionises the way you can live. And you can obviously, from a business point of view, that can involve your cash flow, all that sort of thing. So yeah, protecting it or fixing it is so vital, is what I'm kind of getting at.
Yeah, absolutely. And I think like a lot of the credit card companies and personal loan sort of companies, their decision making and interest rates rewarded are heavily based on your credit score.
Yeah.
Like there's the whole systems are just based on, okay, if this person's credit score is over 1,000, then they are at our top tier rate. Like, so yeah, that's the most important part really, to getting the cheaper deals, especially in that sort of space, credit cards and personal loans.
Definitely, okay. There's a lot to it.
There's a lot to it, and that's why you just need these professionals in your supply chain of services.
Knowledge.
Because knowledge is everything.
Really is.
As Caillan and I were talking about earlier, financial literacy is always at a low ebb. And we've been involved in that for 30 odd years when it comes to the expectation for an understanding of complex financial situations, or often not that complex, but still the knowledge is so low.
Yeah.
You need people to explain what's going on.
I agree. When it's not your game, okay, when you might be incredibly good at what you do for a living, and finance might not be at the top of your list, and might not be your great skill set. Yeah, go and talk to the right people, get the advice.
Yeah.
It's just it's utterly life changing. Yeah.
Is there? You said 30 lenders before.
Yeah, it's about
number.
36 on our panel. Yeah.
Yeah. Okay. Righto.
Yeah. And I think, like you said, it's more just we deal with, our customers are mainly, small business, consumers.
Sure.
And you just deal with such a wide variety of different situations. To run a brokerage like ours, you have to have that spread. You have to be able to make sure you can help people no matter what's happened in their life, really. Yeah.
Well, it changes.
Good on you.
Changes. You think about how your life is, back in your 20s and all that sort of carry on, and how you use credit back in those days as you go through, your kids and life and cars and houses and all those sorts of things. I mean, it's an incredibly important commodity that you've got to really maintain. And then dealing with the right people, making sure you get the right advice, it makes a big difference. I think about people who have bought cars, being a car guy, I get a lot of people who buy, right, yeah, absolutely. If you can rev it, I'll buy it. But essentially, like I know people have signed up to deals to buy, sports cars, whatever, that they're never, ever going to be able to survive that. It's doomed from the point of go. So
Because they borrowed too much money on a devaluing asset. Is that
Oh,
what you're
no,
saying?
no, no. Not doing the research, not talking to the right people, not actually comparing different loans and that. So they pay too much fees, too much interest, all that sort of carry on. So yeah, that's what I'm sort of saying. Look, knowledge is power.
Yeah.
You talk to a few people, or talk to people who've got long-running reputations in the game. I think that's probably the best bet.
Very valid point. And to support that, I ran a contract for Rio in the Northern Territory for a uranium mine that had 450 employees for 10 years. And we were just hired hand educators. And we talked about super, we talked about finance, just basic stuff. And the rorting that used to go on with certain sections of the workforce when it came to a very, very dodgy Ford dealer in Darwin. And we would see these contracts come through, finance contracts for the Ford Falcon, and they're paying 19% interest rates.
Yeah.
And we knew the rates were about 10 or 12 at the time for car finance. And I'd hate to think that still goes on, but I bet it still does with some of the car yards and the dodgy operators.
You definitely, and I was sort of thinking that as you were sort of saying, Aaron, and yeah, car yard finance was definitely the catalyst for our Royal Commission.
Yeah.
And mate, I used to do it. I used to sit in the car yards, and once upon a time that was me. And yeah, when we were able to charge people 8-9% above what our base rates were, and that's what we were doing. And
Wow.
yeah, there was
It's a different world, isn't it?
absolutely, yeah. But people coming in, like you said, people would do anything to buy that car.
Yeah, yeah.
Pay anything. They just wanted that car, and that was it. And yeah, we were just there to facilitate that. And
The F&I guys?
But you had a lot of pressure on you as well, though, right? You had a used car manager and a sales manager over you going, how come you didn't make this on this deal, So yeah, it's a high pressure, high commission sort of environment.
And hierarchy too,
Correct.
of being
Yeah,
told
yeah.
from above,
Yeah.
you have to
Always.
perform or say goodbye.
Yeah,
absolutely,
they're all questioning why you didn't screw as biggest amount of money you could out of that deal.
Yeah, absolutely. Yeah, and it still happens today in car yards. It's still prevalent.
Yeah.
Maybe not in regards to interest rates, obviously, because they're capped at can only write 2% above the base. So that's how after the Royal Commission, that's how it sort of works. Is that
positive result,
Yeah, exactly. That the customers, the lenders would say, okay, this person, their profile warrants a base rate of 10%. You can only write it at 12%,
Right.
and we're capped at that 2%. But the car yards have become shifty in a way that, okay, now we can't make as much money in finance, we'll make it in aftercare. So we'll sell warranty, and we'll sell tint, and we'll sell all these extra add-ons that we can roll into a big, nice package, and we'll finance that in the finance. Yeah, so there's a way, they've always figured out a way to move around it.
Oh, well, I know. Look, years ago, I went and bought this particular car. I'm getting the accessories organised, and things you do. And anyway, I just, I understood the psychology of it. The deal was done. The finance was going to be approved. We just had to find out the final amount for you're talking about the aftercare and the extras. And whatever. And I go into the other room, and there was, without doubt, one of the most beautiful women I've ever seen in my life. And I'm thinking, this is a setup.
Yeah.
Come on.
Always, yeah.
I'm shot.
Yeah.
Instantly, I need the tint, I need the sunroof, I need the everything you can possibly try this car. But yeah, so you're right, they will do it. So being educated about your finance, talking to people, getting the facts. This is why it comes back to education. Everything comes back to knowledge here. So you don't get caught up in the moment and buy all the extra goodies, which I did. Everybody has the right to make a living, right? I always say never apologise for making a living, but if you do it in a fair and ethical way, you're looking after people. Guess what? Long term, your business will be much stronger because the referrals, particularly in the finance game.
God, yeah.
No question.
The referral game's a long game.
Yeah,
It's such an important one.
Yeah, and I think even for us, same as you, Jeff, our pieces over time become a lot more educational. We want to inform customers to make good decisions so that they do come back and get a second loan.
Yeah.
It's not just trying to smash them out the ballpark in the first one and never see them ever again. That's definitely the way the industry had to change, and it has for sure. Yeah,
And it has.
It's evolved.
Yeah. It's self-regulatory, but some industries have done it much better than others, and yours is one of the best. So yeah, good on you.
A great reputation. That's the thing.
Finance brokers have a good reputation.
Well, and what you said about the Royal Commission before about those who had good books. Quite frankly, it says a lot, doesn't it? Yeah, going through the experience.
Absolutely.
So just to sort of wrap up, if you like, because I'm sure that this is a focus for a lot of people. Apart from time, what are other things you can do to improve?
So time is the main one, but
Okay.
good payment history is probably the second one.
Okay.
So yes, you're going to have issues. You've had issues in the past, but let's just say someone has a default listed from the end of 2023, but their payment history on their mortgage has been perfect, all of 24 into 25.
Yep.
Yeah, you're going to get those lenders that are going to look at that and go, nah, their credit score's still low because they've got a default. But then you're going to have those private equity firms like we spoke about before that are going to understand someone's situation and be able to go, hey, yes, there was issues, but look, here's someone that's rehabilitated, made their payments on time. We'll look to give them another loan. And if they can start getting multiple loans on track on their credit file reporting, that their payment history is perfect,
Sure.
that will increase the score. That's the best thing to rehabilitation, is
okay.
to prove that you can do the right thing the next time.
Okay.
So, go on.
Sorry, mate. There's so much to
There is. Oh, no.
Well, come on, we want to get in there. Here's one at the other end of the scale again. The son of a business coaching colleague of mine, out of the blue, announced he was earning some money with his bedroom gaming behaviour, right? He's a YouTuber.
Okay.
It's a totally true story. And he came out one morning at the breakfast table and said, oh, Mum and Dad, I might have to pay some tax. And they went, oh, yeah, sure. You don't pay tax on 15 grand, Johnny, you'll be fine.
You'll be fine.
When they looked into it, he actually had earned 60 grand. And,
Right.
But of course, it's now about 5 years down the track. This kid earns 60 to 80,000 a month.
A month, yeah.
Right. And
Different worlds, isn't it?
And at that stage, tell me if you believe this could be true. He actually went for a loan for his Tesla, right? But because he had no credit card, never borrowed any money, had no history of paying any money back ever, he could not, because he wanted to rack up some points because he had plenty of money to spend on, things to spend money on, because he had plenty of cash. But he could not get a credit card because he had no history.
Yeah.
Then I think the next stage was he wanted to buy a house.
Okay.
Right. And the bank said, look, there's no way in the world, we don't even rate your income as real.
Wow.
There is no justification on whether A, it's real. We know you've got cash in the bank and we see the money being paid in, but there's no record of this being a sustainable income. Therefore, we can't treat it seriously. So this kid ended up paying cash after
For the house.
cash for a house and cash for a Tesla. And of course, things might have changed now because this was about 3 years ago. I had a discussion with his old man about this.
Right.
But is that still an issue where if you don't have any track record on paying any debt back, you've got the reverse end of a bad score, but it's still a bad score. It's no score.
Yeah, that's right.
It would be harder to get a credit card than get a car loan or a mortgage in that situation, I would say.
Yes.
In this,
Okay.
because the credit card, like I said before, it's all system-based decisioning, and so it would just pick up that there's no history whatsoever.
Yeah.
But with the car loan, you could get that all day. He
Right.
would just qualify for a low doc loan. You get him some deposit, put in some deposit, off he goes.
Yeah.
And I would think similar to the mortgage as well. If he went down the path of putting in a pretty substantial deposit with some financials, he'd
He'd
fine.
probably be fine.
Yeah, absolutely.
I would have thought that would be reasonable
Yeah.
to expect that the industry would go, put a deposit down. Here's the record of all my income. It's all been going into a Westpac account,
Yep.
We have a very similar one as an application on the go at the moment with one of our guys. He's a gamer, a YouTube a streamer, they call it.
Yes.
And similar, I think it's 40,000-50,000 a month or something like that. And he's trying to buy a Lamborghini Huracan. And,
Good man.
Yeah, why not?
Exactly.
He can afford it, but it's been a challenge to get him approved. You're trying to get a lender to understand, hey, here's someone that's never had a loan before.
Yeah.
And now they want to borrow $300,000 for an exotic car.
Yes.
We got it done, but very difficult. Yeah.
Got it done. Well done.
Yeah, exactly.
Hence, you need a broker.
Makes all the difference.
Yeah, you're never getting that done on your own.
No way.
Like,
Yeah.
You've never getting
Never.
it done. No.
Yeah.
Yeah.
Well, you're paying for the experience. You're paying for the contacts.
Yeah.
Yeah, let's be frank.
Yeah.
And why wouldn't you? If you're going to get the job done, otherwise he's out there without his Lamborghini.
Yeah.
You can't go through life without a Lamborghini. I mean, really, we all need one, right? bright green one.
Absolutely.
Big edge symbol. Look good.
Another question. If you're declared bankrupt, right? In my head, I've got a figure of 7 years. If you're discharged today,
Yeah.
7 years down the track, your record's clear. Is that right?
So, yeah, I think that is correct. So it comes off your file completely after the 7 years.
So I've got the
Yeah.
7-year bit right.
Yeah, it'll always be listed on the credit file, but like we've got lenders that will literally give you a loan while in bankruptcy or while in Part 9 debt agreement.
Yeah.
But yeah, if you're discharged, even easier.
Even
Right.
easier.
Yeah.
Okay.
Right.
Got
Because
it.
you find most of the people that go through that sort of, environment.
Difficult
They,
stage.
yeah, they are rehabilitated. Like they have got their stuff back on track, and their their bank statements are clean. They've paid all the debts off, and they they've gone through the hard times. Like
So
yeah.
they come through it.
Yeah. I mean, there's definitely the ones that don't, and you never got any chance of getting them approved again. But yeah, there's definitely a lot that do.
Yeah.
Okay.
Got it.
But it does stay on your record, but not.
Yeah, so it'll be on the what they'll have is no credit score. Like it'll pop up on their file saying it's an excluded score, and it would instantly you'll see it and you'll go, okay, what's wrong? And then you sort of read down, and it'll tell you that they're either discharged bankrupt or something like that. But yeah, there's plenty of lenders that'll still look at that.
Yeah. And so they should.
Yeah,
You know,
absolutely.
No doubt
it's
about
not
it.
as if it's a crime. It's just this part of life. Certainly, high risk takers or unfortunate situations where a family situation's gone bad or whatever. It's not as if it's a major indictment on your credibility as a citizen.
I'm sure. Look, I'm sure some people, they do it through mismanagement. Others through circumstance, right?
Yeah.
Always, yeah, and that's like most of the people that we deal with that are dealing with it. Like they're in, like their families and they, got working people, and like you said, they've mismanaged it most of the time, or something's happened, the property market's changed, or they've made a bad investment, and they did nothing really wrong. They just made a mistake, and they deserve a second chance. Yeah.
Well, in the case of a particular event that happened 5 years ago, a lot of people didn't work for a very, very long time, and there's a lot of bankruptcy that was caused from that, massive amount. From what I consider, we've been contacted by a lot of people who've gone through that. So I can imagine that would be a factor. And I mean, it's 5 years ago now, so they've got a couple more years till that's out of their life. But
that was one
on.
of the big challenges that we had during that time, obviously, in trying to operate a finance brokerage. We had so many people claiming hardship on their loans.
Right.
And they weren't realising that the bank would report that to the credit reporting agencies. So all of a sudden they go, oh no, I can't pay my loans, I'm in hardship. And the bank said that they wouldn't do that, but they were. They were going back and saying, hey, Equifax, this person's actually entered into a hardship agreement on their mortgage, and now we're letting you know that that's the case. And so when people are looking at their credit file, they're going, well, they're not making any repayments because they're in a hardship agreement. So, and they still do that now. Like whenever people put their payments on pause or something like that, they think, oh no, it's nothing wrong. I'm just calling up and I'm telling them I can't pay the bank for a few months and I just want a break. That's you actually entering into a hardship and agreement, and that's going to be listed on your credit file. You're not going to be able to get another loan while that's the case. Yeah.
That makes sense.
Yeah.
There's a lot to it.
Yeah,
There's
a lot to it.
And this is something that touches everybody's life, right? Every day, I don't know anybody who doesn't need access to credit. So, and we've all had to do things that, like in my case, many years ago, I was flying high and didn't have a credit score. I think I had a similar, not quite the same sort of problems, or certainly not the same problems as a Lamborghini guy, but I was going very well in life and buying things for cash and living that kind of lifestyle. But then I went to go and build a house, and oh my word, that was hard. Like it was all of a sudden very, very difficult. You had to had legal agreements and carry on. It seemed like it was just easy to go and call a bank.
Yeah.
But so this is something we all live with. We all sort of have to make the most of, and obviously get the right advice when you endeavour to jump into something like this. Yeah.
Very good.
Yeah.
Okay.
Fantastic. All right, well, I think that's the show for today. Look at this. Got a great comment there. Cannot believe that COVID was 5 years ago. I know. It's changed all of our lives, and thank you for that comment there, Lisa. All right, well, unless we've got any last-minute questions, because I think I've bombarded you, mate.
Yeah, no,
we haven't even today.
I tell you what, give him a hard time.
You've come up well. Yeah,
I really appreciate it.
You had an answer to every one.
I know. In detail.
In detail.
Jeez.
Good on you,
Yeah.
Caillan. That's fantastic.
No, thank you very
Thanks for
much.
coming
Adam.
in, mate.
You'll never cut it as
Absolutely.
a politician. You took nothing on notice. You answered everything properly and honestly. I loved it. It's fantastic.
Perfect. No, thank you so much for having me. It's been great.
Absolute pleasure. All right. Well, thank you very much for being part of Wealth by Design here in